Hello and assalamu alaikum to everyone. Welcome to this MCQs class for paper F8AA Audit and Assurance. I am Hanif, faculty member at Tabani's School of Accountancy, and this is the only platinum institute in the southern region of Pakistan. And the purpose of today's class is to solve some MCQs which I have extracted from the past ACCA exams, so that you will be able to know how to solve MCQs, which is the case-based OTQs relevant for paper AA Audit and Assurance. So let's start with this today's class of this MCQs, and I hope that my voice, screen, and my video is all clear to all of you. And yes, this class will be recorded and I will upload it on my YouTube channel and will share the link later on. And the benefit of today's class will be that the MCQs will be solved along with the explanation of the topic of the concern and the relevant topic in this MCQs. So let's start with this first one. It is said that which two of the following should be included in audit engagement letter? Audit engagement letter, which is actually the contract, which is the contract between client entity and the audit firm. It is basically the contract and the contract between the firm and the client company. And in audit engagement letter, there are various contents written which set out the terms and condition so that any misunderstanding can be avoided in the future. First of all, it is said that the objective and the scope of audit. Yes, it is included. The objective of audit is to express the opinion, and the scope is the financial statements. Obviously, it will be included in the audit engagement letter. So that means the first one is included. And at the same time, option C and option D are eliminated because in option C and option D, we are not seeing that option number one is available, right? So this is the good MCQ technique as well. Number two, results of previous audit. Why? No, it was the result of the previous audit, and AEL is for the upcoming year. It is for the upcoming year, not for the previous audit. So it will not be included, right? So it will not be included and this will be eliminated. So we have left with the option B. B is the correct option, and B there is 1 and 3. And number 3 is that management responsibilities. Remember one thing, in AEL there is management responsibility included. Yes. There is auditor responsibilities also included. Yes. So that is option B is the correct one. And number 4 is the need to maintain the professional skepticism. Professional skepticism is basically the attitude of the auditor, through which auditor casts doubt on the financial statements, on the activities of the organization. So this is the attitude, and attitudes is not written in any kind of contract. This is the part and parcel of the audit procedures. So option B is the correct one. Moving next. Number 2. First of all, read out the requirement. Which two of the following situations should an auditor make voluntary disclosures? See, the topic is of ethics, and whenever you are seeing the information of the client entity, now it's up to you whether or not to disclose it to the third party. Remember that disclosures are voluntary and disclosures are compulsory. Disclosures are voluntary and disclosures are compulsory. Now, what is compulsory disclosure? Compulsory disclosure is basically that whenever you observe following things in the client entity, it's now mandatory requirement for you to disclose these things. And what are the compulsory disclosure? That is, if the client entity is involved in a drugs activity, it is a mandatory requirement for the auditor to make a disclosure on this. For example, you are going to the audit and the client entity is involved in any terrorist activity. You have to disclose it because it's a compulsory requirement for the auditor to disclose. All right. When the client is involved in money laundering, that is to prove the illegal money as the legitimate income. If you observe this activity in the client entity, you must have to report it to the relevant authorities. Similarly, there are some compulsory, there are breach of law and treason. What is treason? Breach of law, that is you are not complying with the company's rules and regulation and the applicable laws. And treason, Treason is actually mean that is something against the state, against the country. So in such kind of thing, you have to make a compulsory disclosures, and rest are the voluntary disclosures. So which two of the following situation an auditor should make a voluntary disclosure? Number one, if the auditor, number one, if the auditor, number one, if auditor knows or suspect that client is engaged in money laundering, it's not a voluntary. As I've just explained, it is a compulsory disclosure. So this is not a voluntary disclosure. This is a compulsory disclosure, right? So we will not be including this thing in the answer. So that means if option one is eliminated, that means option A, option B, both are eliminated because there is number one option. Number two, where a disclosure is made to the non-governmental organizations. See that non-governmental organization is something which is not controlled by the government. And if the government is asking us as an auditor to report something related to the client entity, we must have to report them, because that's now become the compulsory requirement to make a disclosure. See, it's a non-governmental organization, and yes, it will be included. So option 2 and option C and D are left. Number 3, where it is in the public interest to disclose, public interest. And number 4, if an auditor suspects terrorist offenses, terrorist offense is again the compulsory disclosure, and number 4 will be eliminated. So that means we have left with 2 and 3, and that is now option D. And when it is in the public interest to disclose, it's the voluntary disclosure. It is the ethical dilemma on the auditor whether or not to make a disclosure, right? So D is the correct option. Number 3, according to ISA 580 written representation, and see that I am now explaining first what is ISA 580 written representation. What is written representation? Written representation is actually when the auditor seeks the evidences, when auditor has obtained the evidences. When you obtained the evidences obtained, see the word obtained. In order to add value on the evidences, you have to take written representation, and written representation is not the evidence, it is the supporting evidence. Written representation itself is not the evidence, it is the supporting evidence. How? For example, that I have some misstatements. For example, I'm the client entity and you people are the auditor. There are few misstatements which I had not corrected, and all the way collectively it becomes the material. So if I had corrected those misstatements, that means you have evidences and you have to seek my written statement from the management, that management is actually endorsing that I have corrected the uncorrected misstatements, right? So whenever the evidences are available, it needs to be supported with the statement by the management. So written representation is basically the statement by the management, which auditor takes the statement from the management. All right. So which of the required the audit support? It's to support other evidences, right? For which of the following matters would a written representations not be suitable? Number 1, that all the deficiencies in the internal controls known to the management have been communicated to the auditor. Yes, you will be having the written representation. Why? Because if there is something a fault in the internal control and management is communicating to the auditor, auditor is testing the control, and then later on auditor will be giving the recommendations in the management letter. And for this thing, management statement is necessary. Number 2, the subsequent events, ISA 560 requires the adjustment or disclosure in the financial statements. Yes, here you will be needing the written representation, because management statement is very necessary. To confirm that subsequent events have been adjusted or disclosed, because it's a requirement of ISA 560 to seek the written representation. Yes, we will be yes and yes. Number 3, the payroll charge Payroll charge. See that payroll expenses are already charged in the income statement for 3 months when the accounting records are not available. That means accounting records are unavailable. See, for example, I have in my hand the income statement and the payroll expenses are charged, but the accounting records are not available. See, when the evidences are not available, how can you obtain the written representation? You will be in a danger zone if you will accept the written representation on that. So that means here we will not be taking, and our answer is option C, because it's asking which of the following will it's not a suitable situation as an audit evidence for the written representation. And number D, that management has fulfilled their responsibilities. Yes, basically written representation is the confirmation that management had done its responsibilities. They have disclosed all the things to the auditor. But see that when the accounting records are unavailable and the figures are recorded in the income statement, how will you accept the written representation? In this situation, written representation will not be accepted. So our option is option C. Now, number four. It's a very good MCQ because it is related to the substantive procedures, and it is one of the challenge for many of the students to write the substantive procedures. If you people have any kind of query regarding the substantive procedures, you can simply WhatsApp me. I can share my experience and I can help you out. Which two of the following substantive procedures provide evidence over the existence of trade receivables? See, existence. What is existence? Existence means that is receivables and the customers exist. They are not fake. They exist in reality. So you want to verify the existence of the trade receivable. You want to verify the trade receivables existence. Number one, agreeing. I have to zoom these options. Number one, agreeing a sample of goods dispatch notes, GDN, goods dispatch notes, to the sale invoice and to the sale ledger. See that basically it is not the procedure to verify the existence. It's not the procedure to verify the existence, right? It is the procedure to verify the completeness. How? See that GDN to the sale invoice and to the sale ledger. The GDN, which had been goods which had been sold, it is being verified to the invoice and verifying to the sale ledger. That means your accounting records are complete. It is not the procedure to verify the existence. And when this is wrong, so that means option A is eliminated, option D is eliminated, right? Option A, option D, both are eliminated. Now we have left with B and C. Number two, undertaking a receivable circularization. Yes. Why? See, if you will be sending the confirmation letter to the trade receivables, and if they will reply, you will be saying, oh yes, they exist in reality. Number three, review the post year end cash receipts post year end. See that receivable is basically at year end. Receivable is at year end, and if the customer exists, obviously they will settle in post year end. Obviously they will settle in post year end. That means next year they will be settling the amount in the next year, and if they will be paying to me, that means they exist. And option 2 and 3 are the correct one. Option C. Number fourth is that recalculating the allowance. Remember that recalculating verifies accuracy. Recalculate, for example, 2 plus 2, and you are having a calculator and recalculate, that means 4 is the accurate figure. So this is basically the accuracy. So that means the option C is the correct one, right? Number five. Which of the following is not the responsibility of the auditor? Which of the following is not the responsibility of the auditor? Number A, to provide an opinion on the truth and fairness of the financial statement. It is the responsibility. Number 2, to conduct an audit in accordance with ISA, International Standards on Audit. Yes. Number C, to express an opinion on the company's going concern status. The answer is no. That means option C. Why? Because auditor is not there to express the opinion on the going concern. The auditor is there to express the opinion on the final financial statements. Number six. Number six, which, and this is the very interesting MCQ. Very interesting MCQ. Number six, which of the following procedures are test of controls? Which of the following procedures are test of controls an auditor should perform in testing the inventory cycle of their client while attending the inventory count? Remember that inventory counting is actually the responsibility of the management. And when me and my staff, when they will be counting the inventory, for example, so you will have to attend my inventory count. And this is covered under ISA 501, audit for the special assignments. Anyways, audit for the special consideration. I'm not going to in depth of this ISA 501. And basically the message of ISA 501 is that when the client entity will be counting its inventory, auditor should attend. Auditor should attend. And the duties are split into three categories: before, during, and after. You have to test our controls and see that what are the procedures. Number one, remember that it is the test of control, not the substantive procedures. You people are already aware of the difference between test of controls and the financial statement testing. That is the substantive testing. If auditor will be applying the procedures on the controls, that will become test of controls. If the procedures will be applying on the financial statements, that becomes a substantive testing, right? Number one, observe. Number one, observe whether the client staff are following the inventory count instructions. See that inventory, yes, it is the correct one. Why? When number one is available, that means option A and option D is eliminated. Number one, observe. You will have to observe the counting instructions. For example, I am the head of the management, and I gave the instructions. I gave the instructions to my staff that count the inventories like that, either perpetual or periodic, whatever. And you are the auditor, you visited there and you are observing whether the accounting instructions are being complied or not. And instructions, providing the instructions to the management, to the accounting staff, is actually the control, and checking that whether it has been followed or not, it's the test of control. So that means option one is correct, and at the same time option A and D are eliminated. Number two, review whether the inventory present in the warehouse for the evidence of damage or obsolescence. No, this is the substantive. This is the substantive. For example, if the inventory is damaged, so you'll have to value. It's related to the valuation. We need to discuss to the management whether it needs written down to its NRV. And NRV is the valuation, it is reported in the balance sheet. So option 3 is not. Option 2 is not. So that means if option 2 is not, so we have left with option B, and that is our answer. But we have to discuss 3 and 4 as well. Number 3, obtain a sample of last goods received note and goods dispatch note to follow through to ensure inclusion in the correct accounting period. That is the cutoff testing. That is the cutoff testing. Again, it is the substantive. And number 4, yes, inspect and review the management inventory counting instructions. See that instructing to the client staff, is actually the controls, and inspection of the accounting instructions, observation, these all are the test of controls. Okay, so option B is the correct one. Number 7, see that internal audit function. What is the internal audit function? Internal audit basically review all the areas of company, all the areas of the company, like financial statements, like controls, like they are also involved in the fraud investigation. For example, if there is a fraud in the organization, an auditor can internal auditor can check that whether the who had committed the fraud and all that stuff. And I am writing in a shortcut manner that any work by the management. Any work by the management to review whatever the task it will be given to the internal auditor to undertake a review. So that's okay. So internal audit, which of the following is not the advantage of company outsourcing? Now what is outsourcing? outsourcing is basically Outsourcing is basically that these tasks are not being performed by my permanent department. These tasks I am outsourcing to the external service providers. To the external service providers, I am outsourcing these things. Okay, and remember that there are a lot of advantages to outsource any function, and there are disadvantages as well. See that which of the following is not that advantage? Which of the following is not the advantage? Number one, there will always be the reduction in cost. A is the correct option. It's not the advantage because it's not always the cost beneficial. It's not always the cost beneficial. Number two, provide access to specialist skills. Yes. Number three, can provide access to internal team immediately. Yes, because you are outsourcing the internal audit function to the external firm, and the staff is available readily. There are a lot of people working in the firms. There are many firms in the city, in the town, in the country. But claiming that it will always be the cost efficient reduction in the cost, it's not the advantage. It's not the advantage because sometimes if the firm is too much specialist in its task, they will charge more fee, they will charge high fee. It quite may be possible, and the fees may be even higher than your permanent departmental cost. It quite may be possible. It quite may be possible. So this is not always. This is not always. Not always. All right. So A is the correct option. Now, number eight. Number eight. Again, this is a very good MCQ, I must say. Which of the following is not? Which of the following is not an audit software technique? Audit software technique. Before going to start this MCQ, I would like to recall a topic, CATS. I'm not explaining the topic CATS, that is the computerized assisted audit techniques. And you know that there are two facilities. Number one here is test data, which is used for test of controls. I'm not going into the depth of the CATS because the aim of this session is to solve the MCQs. And number two is the audit software. Number two is the audit software. And audit software technique is used for substantive testing. It is used for substantive testing, right? And it is saying that which of the following is not audit software? Is not audit software. That means not audit software. That means you have to identify which of the from which of the following four statements there is a test of control statement and it is not being performed through the audit software. Let's discuss. Number one, using computer programs to extract a sample of receivable circularization. It is substantive. It is substantive and it will be performed through audit software. It will be performed through audit software, right? Number two, running a computer program to test additions in the cash book. It is being tested for completeness. And yes, it is substantive. It will be performed through the audit software. Number three, using a computer to perform analytical review. Analytical review, comparison of administrative expenses against the previous year. Yes, this is also the substantive. And yes, it will be solved. It will be performed through the audit software, right? It will be solved through the audit software. Number four, which is our correct option, option D, entering a sample of dummy sale order. Dummy sale order. You know the dummy order is actually used for TOC, test of control. And see that test of control will not be performed through the audit software. It will be performed through test data. So that means this is the test of control and it is not performed, not through audit software. It will be solved. It will be performed through the test data technique. So our option is option D. This is a very good MCQ. This is a very good MCQ according to me. Number 9. Which of the following is a disadvantage of recording accounting and control system using internal control questionnaire? See that you are already aware of the fact that auditor interviews client and auditor fills questionnaire. Auditor fill questionnaire, question 1, 2, 3, and I'm not going to in depth that there are ICQ and ICEQ. All right. But there are some advantages and disadvantages to record the client system in the questionnaire. What are the advantages? What are the advantage and disadvantage? Let's discuss. Number A, they may contain a large number of irrelevant questions. See that the questionnaire are, it is the pre-prepared. It's a pre-prepared questions. These are the pre-prepared questions. Number 2 is it can be difficult to identify missing control. Yes, it might may be possible because I have prepared the thing. They are time consuming. Which of the following is a disadvantage? A is the disadvantage. How? They may contain large number of irrelevant controls. They may and to identify the missing control, it is basically not relevant for the questionnaire. It is relevant for the flow charting. For the flow chart, and we are not going to discuss that flow chart, and they are time consuming to complete. No, they are very quick because I have already made 15, 20 or even 50 questions. I have to just ask to the client entity whether there is a camera, say yes or no. Is there any segregation of duties? Yes. It's a very quick approach. But the irrelevant controls, large number of irrelevant controls, they may contain large number of irrelevant yes, large number of irrelevant questions, right? So this is the disadvantage. Number 10. So is the correct option, disadvantage. Number 10. Which of the following, if are correct? Number 1. Internal auditors should report to the finance director. Absolutely no. Internal auditor are basically reporting to the audit committee. Basically, internal auditors are giving the report to the audit committee, and audit committee in which there are 100% non-executive directors, and they will review the report of the internal audit and they will analyze and they will present to the board of directors for the assessment and the decision making and all that stuff. But internal auditors should not report to the single person. For example, if I am the CEO, if I am the head of the department, if I am the finance director and internal auditor is reporting to me, if the report contains my mistake, I can easily hide it. So internal auditor should not report to the finance director to understand the. Anyways, I'm not reading the complete sentence because the initial conversation is over, but you have to read the complete statement, right? Number 2. Companies are not required to establish and maintain internal audit department. Yes, true. Option B. See that internal audit department is not legally required. It's not legally required. Internal audit department is a good corporate governance practice. It's a good corporate governance practice. It is not legally required. So yes, it's okay. Yes, option B is correct one. Number 11. Audit risk is a function of two components, inherent risk and control risk. Absolutely false, because audit risk includes inherent risk, control risk, and the detection risk as well. So this is 100% false. Number 12. Which of the following statement relating to the auditor reporting responsibilities for going concern? This is ISA 570. ISA 570 going concern. Number 1. I have to read this statement. I have to zoom it out. So read it very carefully. Where, number 1, where management is unwilling, to make their assessment of the company's ability to continue as a going concern, the auditor should include an emphasis of matter paragraph. The answer is absolutely no, because emphasis of I think I should write something here. EOM includes everything. EOM basically refers the matter which is correctly disclosed, significant, but other than going concern. Other than going concern, GC, going concern, other than going concern, because for going concern there is a separate paragraph in the standard report, that is title, addressee, opinion, basis for opinion, and at the 5th point there is a going concern paragraph. So EOM does not include. But here, if the management is not willing to make their assessment, you know what, this is basically lack of sufficient and appropriate evidence. And if the management is not making the assessment, see that I am the management, and I am not making the going concern assessment for you. So that means you have not the evidence. That's a lack of sufficient and appropriate evidence. And if it is material, so that means qualified. If it is pervasive, that it will be disclaimer. So here, this is not wrong. This is not correct. This is wrong. Number 2, where the use of the going concern assumption is inappropriate, the auditor should include the qualified opinion. This is absolutely wrong. That means option D is the correct one. Now, why? See that from the red color, if the going concern assumption is inappropriate, that means you know what? That means financial statements should be prepared on breakup basis. Going concern assumption is not appropriate. And it's still FS is prepared on accrual basis. You know, the whole financial statement, the whole FS is wrong. So that means not qualified. There should be the adverse opinion. It should not be qualified, because qualified opinion is expressed when there is a misstatement at material level. It is a very highly pervasive that the whole financial statement is wrong. So that should be the adverse opinion. So in that context, option D is correct, right? This is basically, I wanted to conduct this session for you people to remove the hesitation to solve the MCQs. And I suggest to watch this again when this will be uploaded, and you can also share this video with your fellow members. And I hope you have understand these MCQs and then how to solve. I really wish you people good luck for your exams. Now take care. Bye. Take care. Bye bye.